Good morning. This is Japanese Economic Review Channel. Welcome to the Macroeconomic and Market Outlook Briefing for the week of May 11 to 15, 2026. Today, we'll analyze global geopolitics, Japanese equity divergence, and policy crosswinds. By integrating market data and weekly outlook, we aim to provide actionable insights into the forces shaping our markets this week. Let's review our core catalysts. First, AI momentum pushed the Nikkei past the historic 63,000 mark, though imported inflation threatens industrials. Second, the USD JPY sits around 156.65, with intervention balancing against US diplomatic visits. Finally, the upcoming US-China summit serves as a critical geopolitical flashpoint addressing the Middle East tensions. A major focal point is the May 14 to 15 US-China summit in Beijing. President Trump seeks to broker an end to Iran combat operations. However, crude oil resilience suggests markets are pricing in a protracted conflict rather than an immediate diplomatic breakthrough. This unresolved tension remains a significant headwind for global macroeconomic stability. Middle East tensions severely impact supply chains, notably causing a Hormuz disruption effect. Japan is forced to source alternative naphtha from the US, sparking input cost spikes. This margin compression will heavily impact traditional manufacturing. Watch upcoming earnings from general chemical and oil refining companies, like INEOS, for real data on these pressures. We're seeing a widening disparity in Japanese equities. The Nikkei's unprecedented surge to the 63,000 level is heavily driven by insatiable global AI demand. In contrast, compounding raw material costs, driven by the naphtha shock, are dragging down heavy industry. Our projected Nikkei range is 60,500 to 63,500, reflecting these conflicting forces. In the FX market, the yen faces intense pressure. We observed massive MOF-BOJ dollar selling interventions around the 158 resistance level during Golden Week. Currently at 156.65, psychological support lies at 155. Importantly, corporate budgets assumed a 150 exchange rate, providing a buffer against immediate earnings devastation as long as the 158 ceiling holds. The USD JPY is squeezed by diplomatic and policy crosswinds. U.S. Treasury Secretary Bessent's visit to Japan highlights yen weakness as a primary agenda item. Meanwhile, markets aggressively watch the BOJ's summary of opinions on May 12th for rate hike probabilities. Incoming U.S. inflation data will ultimately act as the fundamental driver for the dollar's trajectory. Summarizing our drivers, Japanese equities are bolstered by AI momentum and US-China intervention hopes, but constrained by naphtha costs and earnings exhaustion. For the USD JPY, resilient US data and safe haven buying push upwards, while coordinated BOJ intervention and Bessent's diplomatic pressure provide strong downward forces, capping the upside. Looking at this week's macro calendar, Tuesday is critical with the BOJ summary of opinions and US CPI data. These will shape interest rate expectations. On Thursday, Trump's summit in China begins, bringing geopolitical risks to the forefront. Finally, Friday marks the expiration of Fed Chair Powell's term, adding a layer of policy uncertainty. Domestically, earnings season concludes this week. Watch tech momentum with SoftBank Group on Wednesday. For manufacturing facing cost pressures, focus on Mitsubishi Heavy on Tuesday and INEOS on Thursday. Financials will wrap up the week, with megabanks like MUFG and Mizuho reporting on Friday. These disclosures will reveal how firms are navigating current headwinds. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.